Hi everyone, welcome back to this week Weekly Market Update. As usual, let's see what happened on last week, followed by coming weeks to take note and watch out on your positions and what is happening to the stock market and the rest of the other sector as well. So from last week, we can see that the stock market actually went up almost for down almost 300 points as we are entering to the second half of 2022. So for Nasdaq, for S&P, mainly all up almost 1%. Nasdaq is 0.9, close to 1% as well. So, but the thing is that not to forget that is this rally a true rally? We always have to ask this question to ourselves, right? Because we know that the market is weak, inflation rate is high, oil has started to pick up as well, and there's also economy data such as manufacturing activity weakens. All right, so this is what happens on the data we watched on last week. So this, if let's say the manufacturing activity is weakens, how can it be that the stock market is rally? But can we say that it's a rally? I don't think so. Why we can say that it's a dead cat bounce? All along when I've been sharing the chart with you guys, I say that it's just dead cat bounce because it's uh one direction, one clear direction. We are actually at a downtrend, right? So I don't think that is a rally, but I think that it's just a dead cat bounce. So it's not very meaningful here. But if you are doing day trading, yes, the volatility, especially for this time of period, really can let you earn money if you know how to manage your risk wisely. All right. So many things to jump up for last Friday. We can see that came to realize if let's say you're paying close attention, I think the chips sector is not performing well, especially for Micron technology dropped 3%, and other chips maker like Nvidia lost 4%, AMD, and one of the counter which I mentioned previously is Intel. We'll take a look at that as well lah. All right, so this is what happened on last week. Of course, I'm not trying to barrier too long for that. I mean, if you want, you guys can read it up lah. All right, next thing is what is happening on this coming week. This coming week, recession fear is always on the table. Why? Because the rate hike is always on the table. When we come to the new month after one rate hike, the next fear we are thinking about when and how much is the rate hike again. Is it next month, which is the when? How much? Is it 75 basis point or 50 basis point? But do take note, next week, heavy data. Firstly, Monday, public holiday for the US market. All right, I think it's their independent day or whichever. But do take note, it's a heavy economy week as well. All right, so we only got 4-day trading weeks. Take note, NFP on Friday, unemployment rate on Friday as well. All right, so economists expect that employers create another 250 jobs, which is lesser than the May. All right, why? Recession is there, right? Like I say, everyone is cutting job, cutting job. I don't think this data gonna be uh meaningful. I mean, gonna be significant. Might be lower than 250,000. Do take note, if let's say 250,000 came in with what they expect, is on the expectations, the market might go up. If go even below, the market might go up. This is contradicting. The market is not doing well, the economy is not doing well, jobs is getting lesser, but the economy do go up. Why? Because it, this data report will then give the Fed to actually don't go in so harsh, might have a soft landing. That means they might actually reduce from 75 basis point to maybe 50 or maybe down to 25. But like I say, inflation rate is still high. So next week economy data will be tricky if you are playing on news economy. Because if the market go all way high or all-time high or higher than last May, which is impossible, right? Because the inflation rate is there. But if let's say the result come out, it gives the reason for Fed to take even higher, maybe 100 basis point. Why? Because ultimately the market is still, economy is still performing well, people are still hiring. The market has not dropped badly. Fed, why not instead of 75 basis point, give it one good time, one good time, straight away 100 basis point, all in, see where can the market hold. All right, if let's say the market can hold well even with 100 basis point, why do they have to worry, right? So do take note if you are trading on new economies next week, especially on the index, right? Please manage your risk wisely. All right, so this is what has happened. Heavy data. Second thing, I think that you see if the environment data is strong, the Fed official on paper sound hawkish as they do verbally, I think this will continue to put the pressure on the market, right? Like I say, so if let's say it's lower data came in, the market might go higher. Contradict, right? So we shall see, because this 75 basis point is the crucial part. Like I say, we are stepping into a second half of 2022. We are also coming to the next quarter of earnings report following week. Not next week, but the following week. Start off with the bang. All right, I give you the highlight first. So just take note, if you're holding any shares, this might actually be affected, kick into the impact of their company's report earnings due to the height of the interest. All right, because when you height of the interest for overseas exposure, they might have forex exchange differences. As you can see, how much is compared to yen. Recently, I just read on US dollar yen. Apple increased price on the iPhone by almost 19%. All right, more than 90% for other products as well, because of the currency depreciations. All right, so uh, next thing we are looking at what is happening. Yeah, so this is the week ahead calendar. July 4th holiday market close. Then uh, there's a lot of data coming up, so just take note. All right, one next thing, Europe. Hardly talk into Europe. All right, doesn't mean I don't monitor. I do, but I at least step on it. Eurozone inflation rate hit record 8.6%, and it's the first time for ECB to hike their rate. All right, they are prepared to hike their rate in 11 years. All right, so this thing will pull down the overall market. We know that how badly affected on the uh, wars between Russia and Ukraine, because uh, Russia just stopped all the commodities to Europe. This will actually hike up their prices of the commodity itself, and it caused stressful to Europe country. With this rate hike again, I think if let's say the market drop, right, it may actually pull down the rest of the market as well. Right, so do take note, we may see heavily volatility coming in on the Europe side. All right, so if let's say you want to short, you are bearish side, short on the bearish market instead. All right, this country, I mean, this Europe is kind of like bearish. All right, like I said, not just the inflation rate, further economic pressure from the wars over the most price changes is actually on the energy and food security. All right, so do take note. This is no kidding, but if you're holding any long positions, just manage it wisely. All right, next thing. Uh, Today's report, Tesla delivered 254,000 of electrical vehicles in second quarter. Okay, good thing. All right, this is definitely a good news because numbers pay the revenue, right? It's a good thing that it able to produce this kind of huge numbers even though we are at the inflation. That means people is still buying their car. All right, so if let's say you are on Tesla, just manage your position wisely. Don't be, because of this good data, rush into Tesla. Ultimately, I know it's cheap, 600 plus. I am also tempted to go in, but do take note the company have solved their guide to around 50% annual growth. All right, the thing is that I think Elon Musk have spoke something, and not only that, China this quarter, Tesla had to shut down and only allow partial operation in Shanghai. This actually affect their P&L as well. All right, because they need billions of dollars to start the company, they are burning cash. All right, so do take note, but it's a good news after all. Next thing, we are directly in going to the chart for today. So for today, right, this is Dow Jones, which I'm not going to write anything because sorry, I'm not going to write anything. Why? Because I just follow what happens or what I written previously on 25th, which is last week. I say that when we are here, right? Previously, I was here. I say that it's good to long when we are around 30,000. Last week, I say yes, you may want to long, but the mid you are taking a bigger risk, correct? Not? So it's actually ding dong here and there. But S&P 500. Why I say S&P 500? Because most likely people is looking at S&P 500 as a guideline as well. Is well supported at 3008, which is a significant support level. All right, so last Friday it didn't on the day before on Thursday it closed below, right? But because 3008 is like a psychological level, the market went all right, the market bounce up. Okay, the market bounce on S&P 500. So coming short week is very volatile. In order to see this market to turn bearish, you can actually pay attention to S&P 500 crosses 3007, close below it. I think it's kind of like significant. We may continue the downside. Otherwise, it's a good stop loss level for you to play something down here and there. All right, you can scalp in between if you want to. All right, so 3007, once breach, we will go lower. Okay, because 3008 is a psychological level. Do take note, we are still at the downside, right? At the downtrend. Next thing, just want to mention important stuff like copper as well. Copper. Okay, this is what I mentioned. Whichever lah. All right, since December, the market closed below. Copper, like I say, if let's say economy is doing good, all right, building, uh, resource materials is important. But if let's say no one purchase copper, that means there is no growth in the company itself. No one is building any other thing. They do not require the materials, or the material is too expensive. The price drop, and the price plunge for over the weeks, all right, or weeks before as well. So we can see that from technical perspective, right? From technical perspective, this is like a triple top, all right. So break the neckline. We are looking at the mirror image. Let's take a look. Okay, so just for example, okay, so mirror image. They might have chance to continue to plunge, and we might looking at $3.25 around here, which is the next Fibonacci level, 38. But of course, before we go to here, we must cross the 50% Fibonacci level. All right, so have you crossed? We're not sure. If you do the day high, we touches. All right, so Fibonacci is how you draw it. I can use the all the way bottom. All right, have a cross, or I use the close price, touches. All right, but ultimately, they for copper itself still have strength to drop. All right, we are looking at $3.25 next level. All right, so market is not doing well. If let's say copper is dropping. Next counter, we will be looking in China A50. Just a quick recap. Why I want to say this is because the market is not performing well. The market has been dropping over the weeks, and where are we in China A50? Okay, so buy and hold. This is where I recommended. Where's the notes? 18 June is somewhere here. So if you enter on the next day, you're right now up 4.62%. All right. At this current situation, 4.62% is good, right? Just buy, hold, and wait for the market to perform. We know that China President Xi Jinping visited visited Hong Kong since 2.5 years that he have not visited other country, right? So let's take a look at Hang Seng Index. But the thing is that when he visited on last Friday, Hang Seng closed. Alright, Hang Seng closed. But ultimately, I'm still bullish in the Hong Kong market, in the China market as well. So I'm still bullish in the overall Chinese company. I think it's good. We are back on the track again. Alright, we are back on the track. This is a really chart, gentlemen. We are back on the track again. So my call for Hang Seng remain the same. We are still at the bull side. Alright, we are still at the bull side. Where will you go? If let's say you long at the bottom, you just have to put your stop loss and ride it. Where will you go? I'm not very sure, but I know that breaking 22,000 is crucial. If we break, we might actually visit another 3,000 level, close to 25,000. Alright, this will depend and determine on how impactful the market look at what Xi Jinping speak to the market on Friday. Because the Friday Hong Kong is closed, whatever he said will not direct impact to the market first. So you will have to wait until Monday open. Alright, so I'm still bullish on the Hang Seng Index, whereby come to this counter which I mentioned previously, is continue to grow, pull back, lower volume right now, second arrow. If let's say it's being supported by the moving average of the 20 days, we are looking at somewhere here for the next ride. Alright, ultimately 90 cents is still my TP. Nothing changed. Continue to hold on it. Okay, next few counter, BTC. I got burned on BTC. I placed a bet on it, but it's okay. I just managed my risk. Firstly, I mentioned 20,000 is a good support. Correct? 20,000 is a good support. And so when I say that it's a good support, I'm looking at correlated stuff like Coinbase. Alright, I give some long call in my private Telegram group. I got stop out. I think I get stop out at $51 if I'm not wrong. Market go even lower. Ultimately, I feel okay. I'm okay because I manage my risk. If what happens if it go up, I can write maybe 1.5 or 2 times compared to my risk rewards, right? So I think it's a good catch. Right now, just to review it, I will not enter this unless it break above. Right, unless it break. I'm taking a good risk reward. That's why its risk is higher. It's counter trend, which I wrote nicely in my private Telegram group. I got stop out, but it's totally fine. All right, just to let you guys know, I'm not God. I do get stop out as well. All right, so next counter, just to yes, previously I mentioned cruise line. For cruise line, like CCL, right? This is what I mentioned. Did I write anything? Oh no, I didn't write anything. All right, so this is for cruise line. I didn't enter. I know I pay attention to the market. The market gap down, all right, but there's no call from me. I mentioned I still look it daily wise. Where can it be? Maybe it's because the earnings is very bad. So I think there's reports saying that cruise line might go to zero because of no one is sitting on it. The expenses, they are burning cash as well. So ultimately, I don't think it's that bad. We have to monitor closely. We are right now at an all-time low. So for people who want to take a risk, just manage your risk. All right, just manage your risk. Next counter, we will be looking at. One second, guys. Okay, so uh, Intel. Yes, Intel, which I said we will take a look at it. Intel. So we can see that the chips maker is not doing well. This is what I mentioned previously, right? Fibonacci, support price turn resistant. All right, support turn resistant. Drop, break 50%. We are eyeing at the next support $34. I not sure when did I mention because I didn't write a date, but I think maybe like 2 weeks ago. So let's take a look. All right, previously I'm looking. People who have been following me long enough, I'm looking to buy. All right, when it reach the buy demand, this is what I mentioned. But the demand seems weak at the area. This is the area I said not to buy, right? I'm looking at this area. Okay, just to draw. I'm saying that this area not to buy. We try to wait until everyone hit the stop loss, buy at this area. All right, but I can see that the market is weak. Raw market is weak. Chip maker is weak. Not just on Intel, we can see other company as well. And that is why I turn bearish and I give my level at 34. Will it hit here? I think highly possible. Alright, but if let's say you are still into any chip maker stock, just be aware because it's not doing good. Like for example, AMD, which I mentioned previously. Alright, so 16 April. Can you see guys? 16 April. I give next support 85.72. So 16 April is somewhere here. Okay, firstly we are at 90 plus dollar. Okay, next we are looking is break $100. We are looking at 85 with touches, bounce back, support, 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 break, turn resistance, cannot go through, breakdown. Gentlemen, this is the weekly chart. We are heading to 72. We are very near, as right now is 73.67. People who continue to hold it, congratulations. This is how bad on the chips maker itself. Alright, so not only on that, let's take a look at the bigger one. Alright, so this is what I have a bet. 180 firstly, second we are looking at 120. Okay, I think high chance we may come here. Alright, so this is on Nvidia. One last counter for today, not to go too long. For Apple, I know a lot of people like it. For Apple, this is what I draw. Alright, this is what I draw. You see, I draw before the price come out, I already draw. This is the Fibonacci, the retracement. Yes, Apple is good. Everyone love Apple. I'm also an Apple user. But the thing is that the economy don't like it. Alright, the economy don't like it. We are actually forming. Sorry, just want to delete some messy icon here. Right, just want to delete some messy icon here. 1 second. Eventually, we reach the level. Okay, so we can see that right now for people who want to go into Apple, take note. Lower of the previous high, lower of the previous low. Lower of the previous high, lower of the previous low. we may see some high side, but first, this is the first resistance level. Okay, never break through. We are still forming the next higher of the lower of the previous high. Okay, so this resistance 150 psychological level is important in order for it to come back. But once it break 150, the next is the previous supporter resistance 155. So there's a lot of resistance for Apple if let's say you want to long, but for the short side, we are trading with the trend itself resisted by 20 days and 40 days. Can you see? Once cannot penetrate the 40 days moving average, 40-day moving average. So if let's say it come back, it should be in this way. So let me draw again. All right, if you realize, can you see? It's well resisted by this 40-day moving average. Okay, so we may see somewhere in this way. I don't know how will it performs. All right, but uh, in the overall market for Apple, I'm still on the downside. I see where can it go. The next level, once it breach 133 of the previous low 130, we are looking at 118. It's a strong company, but raw is burning money. Just have to be careful. Okay. Earnings coming up. This is from TradingView on 28 July. So we shall see how it goes. That's all for this week Weekly Market Update. Hopefully you guys enjoy. Stay tuned. Be aware of what is happening to the market. It's very volatile. If you do not wish to take any risk or risk averse, stay aside. Wait for the market to go all-time low, and then we can pick it up from there. Remember to subscribe to my Telegram group, like my Facebook page as a support as well. Thank you everyone. Enjoy your weekend. Bye bye.